Welcome to the Retiring Club. My name is John, and I am your host for this evening's session. I want to thank everybody for stopping by. And just to bring you up to speed, I'll give you a summary of the first two meetings. The first meeting we had was called Open Enrollment, where we covered the medical and benefits costs for the employee offered plans as well as and compared it to Medicare, simulated as if I was not with my employer, but I was paying for this on my own. So for me, in my case, I use myself as an example. The monthly cost was $195, and under Medicare with Plan N, Part D, VSP uh, eye care and MetLife take along for seniors dental care, it came to about $373. So wasn't too bad. By going with traditional Medicare, that's going to allow me to have coverage wherever I go. If I was a little tight for cash, I can go with a PPO Advantage plan, and that would save some money on that end, but be a little bit limited to who I can go to. So that will bring us up on the first two sessions. In this session, we're going to take a typical look at what are some of the offerings from an employer 401k and see what we can do as far as finding what some of these investments are. So I'm going to jump right into that. Okay, just stick with me. Okay, everybody. So here we go. The first thing we want to do is take a look at and bring up some facts. So last week, when we were talking about under the red oak, the American Depository Receipt, let's look up the actual term on that. American Depository Receipt, which are a type of negotiated instruments that are basically stocks of foreign companies which are traded in U.S. stock markets. American Depository Receipts are issued by the U.S. Depository Bank and offer investor in the U.S. to invest in foreign companies. So it's like a piece of paper or something along that allows you to invest in foreign companies is something is what I think. Very rare do anybody really use that, but I want to clear that up because I thought it was more a corporate bond or overnight promissory note, which I was totally wrong about that. But anyway, let's go ahead and go to our Yahoo Finance, and then we're going to hit the finance page here, and then we're going to bring up Morningstar as well. So down here in this PDF, I have what amounts to be a typical PDF of a offering from an employer, and happens to be my employer. And they start off with target funds, and they've got all these different dates here: the 2020, 2025, 2030, 2035, 2040, 2045, and going out to 2065. So starting in 2025, they're going to be by default putting people in 401ks automatically at about 3%. If you don't opt out, I think is a term, or defer from it, then they will put you in and probably throw you in a target fund that's close to when you actually will retire at the minimum amount. So that's what those are. Very few people actually use these. Here you have this is a short term. This is like a money market. You can see I'm pretty heavy in that. I'm heavy in that because I'm going to need a certain amount of cash to live off of in case of emergency or when I retire at 67, because I don't want to work all the way to 70. I would spend some of this money to cover myself until Social Security with the small pension that I get. And as we go down here, you can see more and more investments. What you want to do is you want to try and work with your employer to get the symbols for these. Like this one right here, I was able to find out this one, this BlackRock one, equity large cap. So let's see if I can bring that up and we can pull up, because what we want to do is read up about these investments. So let's just see if I can find that here. Give me a second. And it's showing as ACW. So we go over here, put in ACW, and here's the investment. So it comes up $55.19. Looks like it had a pretty good ride up. It's just showing that, but that's over a day or so. And we come down here. Here's the investment objective. I'm gonna blow this up for you. See if I can get that blown up. Fund generally will invest at least 80% of its assets in the component securities underlying index and investments that have economic characteristics that are substantially identical. And let's see what the rest of that wording is. Underlying index investments that have economic characteristics that are substantially identical to components of security underlying indexes. So what I think they're talking about is like some other tracking some other index, like the Russell 2000 or something. And here's some of the companies. Now, this one right here that we just pulled up, this has a lot of foreign companies in it. And if you look at their returns, they're up 9%, 14% a year ago, and 3%. And it's a foreign large blend. So they always tell you need a little diversity, but I'm not so sure if I would want to go that route. So if we come back here, this is an example how you would look these up. Now, these can be a little difficult because they don't have the ticker symbols that go with them. So I had to, in one of my tapings, I had to go back and try and find that ticker symbol. I was able to bring that one up. And let me see if I can find one that I'm already in. So, give me one sec. This one right here. So let's go over to Google. Now I'm gonna just throw this into Google because I know it's not coming up. I've been tinkering with this already. It's telling us a symbol right there. So let's see if we can get the symbol here. Symbols are very important when it comes to looking these up. You see how that's not even coming up. So let's just go here and double click it. See if we can get this maybe to go onto its and bring it up. So we're going right to their page and it's showing in this big bar chart. Now over here, this is 1 year. This is way up there. So let's hit the performance tab. That's what we're used to doing. Let's see, fees are below are 1%. Talks about the holdings, and it should be objective in here. But this is example. Oh, here's the holdings right here. I've never heard of much of these companies. Now this Coinbase here, that is a Bitcoin type of ETF. I've heard a gentleman was talking about today. CSX, that's the railroad. So you can look through here and pick out some of these. If you see companies in here you don't like, they haven't done you right, you can just avoid these funds. But this is an example of how you would have to do your research to pick your funds. Now, you can always hire somebody to do this, or you can do it on your own. Now, most people, if we get out of here and go back and you're just starting out, you don't need a bunch of different funds. You want to get a large amount of money in real quick. You can come right down here and you're looking for a S&P 500 fund. And let's see if I can find one. There it is, right here. BlackRock S&P 500 Index Fund. That baby right there. I got 15 grand in it, represents 25%. You could put all your money in there, and then you're covered in the stock market in your 401k. And then as you start getting more money, you can move out to other ones. This is the one I first started with. So this is about all I have for you on this one. This is how you would get this information. You need those ticker symbols. And it's very important that you get the right ticker symbols so that you're looking at the right investment before you make a choice so you know what's in them. And like this is how they present it out for me and my employer. So I had to go out here and try and figure all this stuff out on my own. And that's why we're doing this. This is something that you may run into as you start to try and figure out your own investments. And I just wanted to give you a little bit of a foundation. You could pick one or two of these and see if you can go through them and just find out which ones you like. Write down that ticker symbol, pick two or three of them, and then go with the one best one that fits your long-term need. For me, the BlackRock fund that I have in here for fixed income, that's been switched over to a Roth. So it's 401k, and there's about $4,000 or $5,000 by the end of the year that will be in there for me in case I need some money out of there. Because remember, with the Roth, whatever you put in, you can take out. The gains must be in there for at least 5 years or a little bit longer, depending on your age. But that's something that you can research on your own, which one's going to be best for you. So it should be right at the top of your note. Not seeing it. But anyway, so that's all I got for you on this one. Just how to look these up, just a little bit more practice on this. If we go back and we start taking a look at the investments I was talking about last week, um, FD, FODOX. I almost forgot the symbol. This is the BlackRock large cap. So it went up about a quarter from what we were looking at. And this has a Magnificent Seven. But this is the kind of stuff you will be looking at once you bring them up, the holdings and the objectives. So this is all I got for you on this one. Just a little bit more on what you can expect as a newbie, or if you're already in it and you're starting to say, hey, look, I'm going to start doing this on my own. This is some of the stuff that I feel that will be helpful for you. And this is all I got for you on this one. My name is John.